Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video.
Welcome back everybody. Let's take a look again on the gold market. So here is on euro currency, not many things to comment. It's absolutely unstoppable. Gold is showing unstoppable performance. It's even more surprising if we'll take a look at the recent data that we've got. Inflation is stubborn. Fed rate cut is postponing on the end of the 2024. But the new market view, and it's not the fact yet that it will happen, because many traders speak about 2025. This will happen later. So yields are now around 4.5, 4.6%. I mean long-term yields. And 10-year yields in the United States. Dollar is climbing strongly, and even all these factors together can't hold the gold. So here as we have on the background definitely the restructuring processes in the global economy, and we will take a look at them in our weekly report. So usually we're talking about some particular data, particular numbers, statistics, but it seems that currently the moment has come where we have to combine this all in general to explain what's really going on. Because it doesn't need to provide lots of different links, quotes, because all the stuff we have done in our previous work. So currently we just could put it together, combine them, and show what's really happening and why currently it's definitely the process of revaluation of the basics of the global economy stance. If previously it was dollar and United States treasuries are as a guarantees of the yield above inflation. Currently, the dollar is losing its future, and market is turning to some alternatives. And that's one of the reasons why gold is rising. Besides, we do not see yet the participation of the individuals in this process. If this will happen soon, and in China this process already is starting, gold could get really explosive action, and the 3,000 target that Bank of America mentioned, we could see really fast, because just in a day we see the gold already around 24. In the beginning of the week it was around 23. So the pace of the upward action is really strong, especially for the gold market. So now the speculators have really big problems with the finding chances to jump in the current upward action. It becomes difficult, especially on the long-term charts. That's why previously we talked that technical analysis in the current circumstances plays the second role. It's losing its features for forecasting the performance, because the drivers of this action are not technical, and you can't predict from the technical point of view gold performance here. So we warn you about the technical moments, but it's really dangerous to take the position currently around the top and daily level. But well, everybody has to answer on this personally. So at the same time, this background that we have here is really great for our tactics of the trend following that we have explained last week. Overall idea was to waiting for retracement while the daily trend remains bullish, waiting for retracement to predefined levels, taking long position and out at the previous top at the overbought area. So currently market is coming new overbought on the daily around 24. So but on the weekly it's already overbought at the long time. On the 4-hour time frame chart, currently I do not see something really interesting, except maybe that currently market stands in 1618 extension of the most recent retracement. On the hourly chart, you could see, guys, why yesterday and in general previously we said that we will not consider taking any short positions, despite you could get patterns or something based on the reverse on yesterday's hand short inspection. So yesterday we talked about this pattern, possible downward action, and even said that if you still would like to get short, you could try to do this, but do not place too extended stops. Stop just above the right arm will be enough, just to not risk too much. And you could see what has happened. Head and shoulders has failed, so just market has broken through these points. It has put the foundation for the possible rally. So head and shoulders has failed. Market has shown this upward action. Currently, we see only possibility for retrading is based on this most recent thrusting action on the hourly chart. So if we get here some brand body stop with the retracement to the 23.70, 23.75 area, that would be a nice opportunity for taking the new long position. Also, it stands very close to the previous top, as you could see. At least 30% retracements market is showing sometime. So you can see here was the 30%, here's what 30% as we were trading in the beginning of the week. Here was even slightly deeper confidence area. Here was, as we remember. Now, as we come into the Friday and end of the week, maybe if traders will start booking result, here's we also could get some retracement, but we should not count on the big drop here, and just keep watching for a possible long entry until daily trend stands intact. So that and towards what we have currently on the gold market. No bearish positions, long entry is difficult on the higher time frame. It's possible, as I consider it, only for investing, if you intend to keep positions for the long term. For speculative purposes, you will have to answer to yourself on the question: are you ready for ignoring technical background and just making bad taking position based on some other drivers that have currently on gold? It's psychologically very difficult because you will have to buy at the top near the daily and weekly overbought area, and any moment you could catch the significant retracement against you. If you're investing, it's not the problem because you're holding for a long time with almost no leverage or very small leverage, and that's really absolutely not the problem if market shows the retracement. But if you're using it for trading purposes, for speculative purposes, that might be the problem. That's why in the current circumstances, as I said, we think that it's safer to keep with the tactics that we explained on intraday charts, particularly speaking, buying the dips around the predefined levels and get out nearest the previous top that has been formed. So that's our 2 cents on the gold right now.